Good morning.
Good morning.
Matthew, right?
Yeah, that's right.
Good to see you, Matthew. Thanks for coming on this morning. You're the only one so far. So I leave it to you to, if you have any questions right off the bat for me, Matthew.
I don't. I joined out of respect for your time and, paying attention to the materials that you presented for us.
Okay, very good. Well, as then I'll begin. Then as I sent out a video late yesterday for the update video, and I talked about assignment number 3. But also one of the things I put in that video was a couple of things about the final examination and the study guide for the final examination. But that's going to be our subject for today, is what I'm trying to accomplish next week in the final week of our Business 330 course. And that is a review of 4 key areas. The first area is the beginning part of our class, with a series of multiple choice questions defining finance, mainly being taken off of assignment number 1 way back when. Way back when. It's an 8-week course. It's not. I breathe longer than this way this course lasts. But be that as it may, basically the definitions of business finance or corporate finance. And remember, we talked about that finance is the role or the goal of finance is to maximize shareholder value, to maximize the value of a firm in the marketplace, to take the assets of the company to produce return on those assets that provide cash flow and profits that are able to fund and pay back the right-hand side or the capital structure side of a balance sheet, which is the debt and the equity. In other words, make money and make money enough to pay back your investors, and then have enough left over that you can grow, reinvest, purchase, buy additional assets to grow the company. Boy, it sounds awfully easy to do that, but many companies, as we all know, many companies that we work for struggle with this. And the 2 main areas that we struggle with in making sure that this can happen has to do with third parties. One party, the government, and the regulations of the economy, and the regulations of managing our business, and the regulations of managing people, managing environment. The government is definitely a factor in how we achieve success as a business. And the second factor is our competition. What type of markets we're in and the competition that we have in those markets. Do we have superior products? If we don't have superior products, do we have enough wherewithal to get our specific market niche and be able to survive and grow in the competitive workforce? So that's basically what finance is all about. The financial manager is in charge of acquiring assets to produce an adequate return to be able to satisfy investors' requirements and then compete in the world of government regulation and competitive regulation. And that's what this class is all about, to give you an introduction into that. Boy, I should stop right here, Matthew. That was the best thing I've said in like 6 weeks. That was pretty good synopsis of this course. But be that as it may, that's what this class is all about. And what we did through a variety of stages in this class is we attempted to solve that problem or understand how to deal with that problem of being a competitive company, financially managed efficiently in today's world. And it all starts off with number 1, understanding your financial statements, understanding what is the income statement, understanding what is the balance sheet, understanding what is the statement of cash flow, and how the data that is provided us by our controller's office and our accountants and our public accountants are able to give us the return or to give us the feedback to where we go into the future. And that's where financial management comes in with accounting, is the accountants provide us with the data of, are we successful in our asset buys? And also, if we're not successful, how do we make it successful? And that's where managerial accounting comes into play, which some of us have studied. And using all that information, we take a look at our financials of what happened and decide what's next. And so we spent a little bit of time understanding those three financial statements. We also spent a little bit of time of understanding financial statement analysis and the trends that exist in those areas. For example, we looked at liquidity ratios. We looked at debt management ratios. We looked at profitability information. All key areas that we can take from our financials and compare ourselves to the past, our own operations, by doing trend analysis. And secondly, by comparing ourselves to the industry and to the market that we're in. And those comparisons of those key financial information give us an idea of how we're doing, give investors an idea that management knows what they're doing, and gives our competitors an idea that, we better worry about these guys. They don't know what they're doing. Let's just keep going. So that's what financial statements are about, and financial statement analysis is we spend a little bit of time understanding that. And one of the key areas that this all interacts is in our portfolio that we selected way back in the first week of the course. We selected a series of stocks that we all picked, totaling $100,000, and we're tracking those stocks throughout the course of our class. One of the reasons we do this is just for some of us who have no history of understanding the markets, it gives us a little practice in how this all works. And secondly, it enabled us to select companies in our portfolio to do a little analysis on what they tell us about a specific company. We all have done that so far in this class. Once we did that and got through the financial statement analysis part, then we learned about one of the key analytical calculation areas of finance is understanding the concept of money, the time value of money. What is money worth today compared to the future? What is money worth in the future compared to today? What are some of the ways of paying back debt, like an amortization schedule? Finance is a series of numbers, and that's why some students don't like it. I hate numbers, and I don't blame you. But finance is a series of numbers, and understanding where those numbers are in relationship to what your strategy is for those numbers. And that's why the concept of the present value of money and calculating that is important. The concept of the future value of money. And it's all related to three key areas. The amount of money you're talking about, another word for that would be principal. Another area that would be the interest on that money, either the expense interest or the interest of return. And then over what time period that principal and interest is accomplishing. Is it short term, 30 days, 60 days, 90 days? Or is it long term, 10 years, 15 years, 20 years? The combination of principal, interest, and time determines the present and future value of money. All of us, even though if we don't have any business financial management experience at all, understand this because we all have put money into savings accounts. We all invest in real estate or houses. We all buy something in anticipation of return in the future. And what is that return going to be over time? We all deal with this. In financial management and finance, it's just even more of a bigger deal because you're dealing with a lot of money. Hundreds of millions of dollars invested today for the future. We owe money that has to be paid back in the future. We got to make sure that we can pay that back. So all these things and that concept of time value of money are very important to understand. And once we completed that time value of money, then we got into the area of, okay, I know where I get my money from, liabilities and debt. I have to determine what that costs me. And then when I invest it, is the return off that investment enough to cover the cost of that money? This is capital budgeting analysis. Basically, assignment number 3 is where you have to determine, all right, it's costing me 9% to borrow the money or to issue stock or take it out of retained earnings and profits to invest in a new asset. That asset is going to pay me how much in return based on my experience and my knowledge of my business. What can I sell that product at? What price? What is it going to cost me to produce that product? What is my tax situation? What is the depreciation that the IRS allows me to charge for that use of that asset? Do I have additional working capital costs? And is that asset going to give me some return at the end of its life in the salvage or disposal value? That's capital budgeting analysis. And you all have did that and fairly successfully, very successfully, in assignment number 3, where you determine the present value of future cash flows generated off an asset. And some of those cash flows are determined by naturally revenue and expenses of managing that product, but also what the Internal Revenue Service gives you as a deduction in depreciation, the tax rate on your profits. So it's a combination of accounting, marketing, distribution, manufacturing, and finance. That's what assignment 3 is all about. Where do you get all that data, and what does it mean when you put it all together in a spreadsheet? Well, what it means is you want to have a positive net present value. What it means, you want to have an internal rate of return that's greater than your cost of capital. What it means, you want to have a profitability index greater than 1. What it means, you want to pay back the investment of the product quicker than the length of the project life, the payback years. And all of us have done that in assignment 3. And so one of the interesting aspects of finance is being able to, as I just basically gone over the course in about 10 minutes. And basically what it is taking a series of strategic decisions, investment of capital, hiring of people. Should I borrow money long-term or short-term? Should I issue stock or use existing profits? Should I find a partner and merge with somebody? Should I get government backing? I'd stay away from that. And how does this all correlate to the future value of your business? That's what business finance is all about. And then we end the course this next week talking about capital structure, dividends, and cash flow management. Basically, the last steps of an introductory course in finance is, okay, how do we get some of these returns back to our investors? Well, we need to pay dividends, but you can pay dividends a variety of different ways. And we'll talk about that in our week number 8 at the beginning of the week. Also, cash flow management. And I don't think I have to spend too much time on this with you all, because you do it every day in managing your own personal finances. You have revenue, your paycheck. You have expenses, some fixed, rent, mortgage, car loan, insurance. You have some variable expenses that you can do without, or you do whatever, you make that decision whether you use them. Food, clothing, kids. Do you realize kids are a variable expense? I tell my kids that every day. Hey, you guys are variable expenses. Get the hell out of here. So in other words, you make that same decision of your own cash flow management of how you allocate and spend your revenue. And hopefully, if you're doing it okay, you're doing it enough where you don't have to rely on debt to help you out, credit cards, or you're saving some money for future investment in a savings account or a 401k, retirement, or some other type of investment where you can reap the benefits in the future by using that money as it grows over time. Oh, wow, future value of money. That's what cash flow management is all about. In the state of California, in 2000, and I'm going to go pre-pandemic. In 2019, there were 125,000 businesses started in the state of California in 2019. Of that 125,000, 80,000 failed within 18 months. 80,000 of 125,000 companies that began operations in the state of California. Now, remember, a lot of these are mom and pop and individual entrepreneurial companies. but over almost 3/4, 2/3 collapsed within 18 months of starting. And you know the main reason why? Cash flow management. They didn't have enough cash to cover the business into the future. They had enough cash to start up the company, but then they didn't manage their cash flow and have enough capital left over to run the business, thus adios. And that's the biggest problem in our own personal money management. Geez, I'd love to go on a cruise this holiday season, but in order to go on a cruise, if you don't have enough revenue from your paycheck, you're going to have to use a credit card. And if you use a credit card, then you got to pay it back in the future anyways, probably within 30 or 60 days. If you don't, your credit rating is going to be influenced. FICO. Companies have the same hassle, just on a larger scale. Here at the University of La Verne, right now, we're midway through the fiscal year of 2022 and 23. We're now projecting a $10 million deficit for this year. That means we got 6 months to figure out where we're going to get $10 million to balance the books. Not easy. Many companies are going through this these days. And to top this off, our economic indicators say that coming in the next quarter, maybe the second quarter of 2023, we're going to have a recession. That means sales are going to drop. Revenue is going to drop. And now we have a $10 million deficit heading into a recession. Boy, if that doesn't keep you up at night, I don't know what does. And a lot of us are going through that. One of the reasons why you all are taking this class is to make yourself recession-proof. Why? You have the skills of a business degree. That's one of the reasons you go to college, is you make yourself more viable in the market. Well, bingo, that's what companies do every day. They're trying to make themselves more viable in the market by being efficient, by being cost savings, by being maximizing their value and revenue to the fullest extent. And that's what you're doing, taking a class in college. You're preparing yourselves for the future and your future return. You know, I know I hear a lot these days, and rightly so. Geez, it's costing me $umpteen-thousand to go to college. This is ridiculous. Why am I wasting my time listening to these dopey professors online who half the time don't know what they're doing? And what am I doing? Well, hopefully most of the time the professors know what they're doing, and hopefully most of the time you're paying attention, because your future value is the return you get off this, not today, but in 5 years. You might have a job prospect in a couple of years, and they say, well, tell us your experience. Well, I have experience here at the job, but also I have a business degree. We've studied finance, I've studied marketing, I've studied accounting. Oh, okay. It keeps you competitive into the future. And that's what companies are looking for. And that would increases your value. So all these skills of cash flow management, understanding future value, discounted cash flow, net present value, capital structure, earnings per share, amortization schedules. All these don't have any value to all you today. You can see there's only one student on my review class. Most of you don't give a rat's ass about this class. I shouldn't say that. But at the same time, it's keeping you prepared for down the road. And if you're being hired as a financial manager, they care more about what's going to happen to the company next year, not now. They care more about the company and its competitive nature in 2 years, not now. Because right now you have managers running the business, your accountants, your manufacturers, your sales force. You in financial management are looking into the future. Are we going to be competitive and efficient in the future? And that's what this class is all about. And that's what your program is all about, to prepare you for that. So I planned on a 20-minute kumbaya session about explaining the class, which I just did. And now what my schedule was, Matthew, since you're here, and those who are listening view the video, I open up to questions and specific questions about what I just said, about specific things. Now, the good thing about this class is this: it's online. You have all your materials. You have a study guide. You have all your assignments and the solutions. You have all your feedback, all your grades are posted. You know exactly where you stand heading into next week. The rest of it, it's up to you. On Monday afternoon, I will post the final examination to Blackboard. On Wednesday, December 14th, you are due a final valuation of your portfolio. And then you are to turn in your final examination work with those files to Blackboard by next Sunday. And then by the 22nd of December, I'll have your grades posted for this course. So now you have all the materials. You have the ability to gather those materials on your computer and review. You have next, begin on Monday, you basically have 6 days to review this, to give me concise, precise, organized answers. And then you're done. And then you're ready to finish your business degree and kick ass down the road. One of the best things about this course is not what you're learning now, is how this helps you deal with the real world and learning in the future. Trust me. And that's why one of the key things of this class is to keep in touch and know that you have a professor, this dopey looking professor here on the internet, is there for you once this class is over. If you need a letter of recommendation for graduate school or for a new job, if you need some help in understanding investments, if you need some help with your current job and you don't know what the hell they're trying to do, and maybe you could ask me to sort it out. The best part of this course and this program at La Verne is you are now part of a network of colleagues and business associates that can help you as you go forward into your career and into your management of your life. And that's the good thing. I know that I'm sounding like an admissions officer, which I'm the farthest thing from, trust me. But you have this class and a network of professors that can help you. So I urge you to complete your course evaluations. I urge you down the road, if you need anything, recommendation letters, information. I have a great site on LinkedIn with lots of data about jobs and finance and accounting and marketing information around in business. Sign on to that LinkedIn account. Stay networked with the university and especially with me. That will prove valuable down the road as well. So that's the end of my spiel this morning. And Matthew, since you're here, if you have any other follow-up questions or that or feedback, please go ahead. If not, I'm just going to sit here for the next half hour or so and wait and see if anyone else comes on. I'm going to stop the recording and just go forward. So I have 3 other class review sessions this morning following this one. So it's a busy day for me. And 2 are here. I'm speaking from my office here at the university. I have two classes coming in to my offices this morning. And then I have another remote review session. So busy day for Mr. Hassey. Matthew, any questions?
No, I signed on out of respect for your time. I really appreciate the summary. Anybody who watches this later, sorry, I don't have any real questions. This class has been very easy to follow and the materials have been terrific. So thank you very much.
Okay, Matthew, and one last point I want to make, and I'll just say it to you, but I'll say it to the whole course. And I mentioned this in my video I posted yesterday evening, is that please take a look at your grades. Please take a look that you understand where you stand in this class. We have some students that did not post work, and so they have zeros sitting on their grade sheet, and that where all the rest of their work might be a B or A work, but because of that 0, they have C's, D's, and F's. So please understand that. If you have questions or concerns or how maybe you can fix that, please let me know and make sure you get that cleaned up. I know a lot of you are spending a lot of money for these classes. You want return and value. And to get a D and a C ain't gonna cut it as far as your major is concerned. It's not gonna cut it. And you're not gonna have a good grade point average, and it's not gonna be worth beans in the real world marketplace. You wanna succeed in your classes. So please, anything I can do to help you with your questions or understanding where your grade picture is, please take the time this weekend to go to Blackboard and look at that. I know sometimes I was a student once too, and I didn't have Blackboard or anything and I had to rely on the professors giving me my work by hand. But I always was in denial. I always waited to the last possible minute. What's my grade? Where am I in this class? Do I have a B? Do I have an A? I was always scared to find that out because it's tough. Sometimes if you don't think you're doing as well, I don't want to deal with that right now. But please, these class periods are only 8 weeks. You don't have time to dilly-dally. Find out, feel comfortable where you stand, and anything I can do to help that, please let me know. So Matthew, I appreciate you coming on this morning. It shows me your commitment to this class, and I like that. And so if there's nothing else, I'm going to shut off the video, and you're free to be excused. I'm just going to sit here in the darkness of my office and wait to see if any more people come on in the next half hour. Okay.
Very good. Well, have a great weekend. Thank you so much.
Thanks, Mag, and have a happy holiday, please.
You as well.
Bye-bye.
Bye-bye.